Hello everyone, PS from PS Invest Plays here today. Most investors know Broadcom as merely a technology company. Since it does not sell its semiconductor chips and infrastructure software directly to consumers, some investors may know little about this tech stock. Broadcom is a key player in the semiconductor industry, and its stock price has skyrocketed to $465 from as low as $150 in 2020. So, is this trend going to continue, or we can expect a pullback? In this video, we will understand its business, its financials, review its charts using Elliot wave theory, and see if we can make money. So stick around. I think you'll like what I have in store for you today. Broadcom, ticker AVGO. Broadcom, like many of its semiconductor peers, has been a clear beneficiary of the heightened semiconductor demand driven by the underlying growth in semiconductor chips in smartphones, cloud data centers, as well as home networking equipment. Broadcom supplies wireless connectivity chips to Apple and other smartphone OEMs, and its switch silicon and custom designs are essential parts of data centers owned by the cloud hyperscalers. Meanwhile, internet service providers (ISPs) also depend on Broadcom to supply the silicon used on set-top boxes and home networking equipment. Broadcom has been growing its revenue steadily over the years, including through a number of key acquisitions in recent years, such as acquiring CA Technologies in 2018 and Symantec in 2019, respectively, to strengthen its capabilities in the infrastructure software segment and diversify the company's reliance on its highly successful semiconductor solutions business and move into the higher margin enterprise software market. While its recent attempt to acquire SAS Institute, which sells analytics, business intelligence, and data management software, failed to materialize as SAS Institute's employees were concerned about the synergies with the proposed acquisition, I think Broadcom would be on the lookout again to continue building on its market leadership. Broadcom has made 36 acquisitions over the years. While Broadcom is certainly riding strongly on the upcycle of the semiconductor industry, the company has also been quietly looking out for opportunities to grow their cloud in the software segment, as long as they meet the company's stringent criteria of processing technological market leadership. Therefore, this should provide investors with a high level of confidence that Broadcom is only interested in acquiring targets that have already proven their worth as market leaders and could help Broadcom to expand its leadership, even though these targets may not necessarily be in high growth areas. Also, Broadcom dividend for its common shares now stands at $3.60 per share quarterly, or $14.40 per year. At its current price, that amounts to a cash return of 3%. To put that into perspective, that comes in at approximately 2.3 times the average dividend yield of 1.3% for the S&P 500. Broadcom has been paying dividends since 2010 and is also increasing them yearly. Revenue, gross profit, EBITDA, net income, earnings per share, EPS, are excellent for Broadcom. Finally, Broadcom is a highly profitable semiconductor company with a formidable patent portfolio. While the company doesn't post industry-leading top-line growth, its ability to unlock EBITDA profitability is truly world-class. I think the company is very well positioned to navigate the multi-year secular tailwind in the semiconductor industry and even manage a potential slowdown in growth. Broadcom continues to extend its market leadership through shrewd acquisitions, and investors should continue to watch this space. At the current price level, I don't think Broadcom stock is expensive, although I would prefer to wait for an optimal entry. This is also indicative in the charts where I see the stock price to correct and then increase considerably in the next 3 to 5 years. If you like this video, don't forget to subscribe, hit the like button, and share this video with your friends and family. Looking at the charts for Broadcom, the bull run that started way back in 2009 is still not over. It has completed its first 4 waves and currently it is in its final leg up, which is wave 5. Now if we look closer into wave 5, wave 1, 2 and 3 are completed for Broadcom. It is currently in wave 4, which is a corrective wave, and I expect a pullback in the stock price to $416. This to me is an excellent buy zone. When this correction is over, I expect wave 5, which is the final leg up, should resume and should take the stock price to $716, giving us a profit of 72% in the next 3 to 5 years. Now, let's summarize. As I said earlier, for Broadcom, wave 3 is complete. Expect a pullback, bringing the price down to $416. This is an excellent buy zone. For long term, in the next 3 to 5 years, expect a 72% upside potential, taking the stock price to $716. The icing on the cake is that it also pays 3% dividend, which is on top of the growth in the stock price. What do you think of this analysis? Please leave me a comment and let me know. As always, don't forget to subscribe, hit the like button, and share this video with your friends and family. Until then, bye-bye.